All right, welcome to Sip and Chat, your weekly dose of real estate insight and friendly discussion. Each week, we will be discussing what is new in the market, from interest rates, housing statistics, community insight, and your local news, with our favorite drink in hand. I don't know if I can show their label or not, so I'm just going to turn it this way. I am having a Coke because I need some energy, and that is my caffeine of choice. And
I just have Cobra as usual.
all right. And if we didn't say, my name is Yvonne Brink with the Brink Home Team.
This is Levin with the Brink Home Team.
All right, so let's go ahead and get started.
Nice to see everybody again.
Who are you seeing?
I see people.
You see people.
I see people watching.
All right. Well, you know people are watching.
I see people watching.
But you see, okay, he sees you. So stay tuned. Anyway, we're going to start off with the mortgage rates right now. So
once again, our rates are brought to you by Mortgage News Daily. 5.63 to 6.25 are our rates for the day.
all right.
And we're off and rolling.
We're off and rolling. So let's go ahead and start with stats. And we cover the three largest cities in South King County. And we're going to start off with Kent. So in Kent right now, we have 183 homes available. So it has gone up a little bit more. So sellers are putting homes on the market. Only 7 sold last week. And the price range is ranging from $580,000 to $1.3 million. So that is the price range of what just sold. The sell price is 3% below what it typically is. So it's 97%. So buyers, if you're out there looking for a home, now's a great time because you are able to negotiate with the sellers on these homes. And the average days on market in Kent is only 13 days. 6 homes sold in 15 days or less. So that's not bad, but out of 183, only 6 homes sold and in the last 15 days or less.
And Kent did have the most homes available on the market this past week. And then we'll head right off to Federal Way, which does have 121 homes available. We did have 9 that sold this past week. Sold just a little under asking price at 99%. And the average days on market was 25 days. And let's just speak to a couple of points here. 5 homes sold after being on the market for 20 or plus days. So they are staying on a little longer than they have been in the last several weeks. 4 homes sold under 100% of asking price at 97%. And the price range was $477,000 to $1.1 million.
All right, and then from there we go straight to Auburn. So in Auburn we have 169 homes available right now as of this evening. 16 homes sold last week at a price range of $450,000 to $1.1 million. Did I say something wrong?
It's just a taping.
Huh?
I got kind of tickled over the taping comment.
Oh, trying to elaborate. Anyway,
Taping.
homes sold at 99% in Auburn. And wow, their average days on market is 42 days. Am I reading that right?
That is correct. They are they hold the prize for the longest amount of time on the market this past week. They had a couple of homes that were on for quite a long time that etched it up a little bit.
Yeah, I'm seeing this. Eight homes over 30 days on the market.
Yeah.
So, I don't know. Why do you think they're staying on longer?
Well, there's a lot of buyer activity, but not a lot of offers being written at this time. There's a lot of people playing the waiting game on the sidelines, and they see the house, but they don't act on it. So
Yeah,
it's
well,
a lot of activity.
Yeah, and I think a lot of it has to do with, one, interest rates. People are waiting to see what's going to happen with the interest rates. They are coming down slowly, but they are coming down. That is one. 2, a lot of people are curious about what's going to happen with with the presidential election. They want to see who's going to get into the office and what their policies are going to be. So that is another one. Right now, we have a lot of people who are putting their kids into schools. School has started up, and unfortunately, if you guys have been watching the news, a couple of schools have not been able to start on time due to one reason or another. So a lot of that is taking play in homes sitting on the market right now. But what we have learned is that during presidential elections, more homes sit on the market longer. Is that correct?
Yes.
They sit on the market longer because everyone is waiting. However, after the elections, home prices tend to go up. So buyers, with the interest rates coming down right now, knowing that there's a strong possibility that these home prices may go up after the elections, you might want to take advantage of getting out there right now and looking at these homes and putting in an offer. Not only that, you're not having the competition that we've had previously. So buyers, please take note of that. And lastly, we want to talk about condos. You want to jump on that real quick?
I'll jump on condos. The first thing I was going to comment is that some of you folks have been waiting and you've lapsed your pre-approval, and you might need to go into your lender and get some things squared away so you actually know what you actually do qualify for. And that's another reason that people are not able to act, is they are not ready to go. They've had to go through the process. And as we get towards interest rates dropping, there will be more people trying to get into the lenders, and the lenders will get busy. So on to condos. Condos for the three areas, Auburn, Federal Way, and Kent, 127 available. We only had 6 sold last week. It's pretty quiet out there in condo world. Mm-hmm. Asking price $250,000, sold price $215,000 to $460,000. Sold at 100% of the asking price, and the average day on market is 29 days. So once again, condos still good supply, about 30 days for a transaction to hit.
Today I'm here to talk to you about something super important. The difference between a Heloc and a mortgage. One of my clients got confused about these, and it ended up costing them more money. So I want to help you understand the difference and avoid making the same mistakes. So let's get into it. Okay, so first let's talk about a mortgage. A mortgage is a loan you get to buy a house. You pay it back a little at a time, and each month you pay part of the loan itself, which is called the principal, and a fee to the bank, which is called interest. The more you pay, the more of the house you actually own. This is your equity. What is Heloc? Now, Heloc is a little different. It stands for Home Equity Line of Credit. It's like a credit card, but instead of borrowing money from the bank, you're actually borrowing money from the value of your house or the equity. The problem is, for a while, you only pay the interest, just the fee to the bank. You're not paying down the loan itself. The big mistake? Well, one of my clients didn't realize this. They thought that every month they were paying down their Heloc, but really they were just paying the interest to the bank. So after years, they still had a big loan to pay back. That's a huge mistake. You don't want to make that at all. That's why it's important with a mortgage, you're building home ownership in your home every month. With a Heloc, you might only be paying interest at first, which can leave you with a big loan to pay off later. This is why you need to understand what kind of loan you have and how it works. Thanks for watching. I hope this video helped you understand the difference between a Heloc and a mortgage. Be smart with your money and don't make the same mistake as my client did. If you have any questions about this or anything else about real estate, drop a comment below or reach out to me. So,
if you found this information helpful, don't forget to like, share, and subscribe to our channel for more real estate insights and updates. Your dream home is out there, and we're here to help you find it. Don't forget to watch some of the information coming down the pike in this next week, and we'll see you on the next one.
See you on the next one.
Bye-bye.